The first session is over, and this session is for members where we want to, take a little bit about delve into Forex signals, how to apply them, how to use them in when we get them from the epic Forex signals. All right, because signals come every day, and these signals you trade on them, you always make money. Okay, you make profits. So if you have a question, you can just interrupt me, or mute yourself, interrupt me, and then ask a question. But after the presentation, I'll always give time, for questions to be asked. Okay. All right. So let me go ahead and start sharing my screen so you can see the trading platform, how it looks like. So can you see my screen?
Yes.
Good.
Yes.
All right. So here you have the normal screen. There are different kinds of views that you can change to. You understand? But these ones are the candles view. All right. And these things are called candles. You know what they're called candles, right?
Yes, candle.
It's an interaction. You can say. You know why they're called candles, right? Because they look like candles, normal candles,
Oh, so yes.
Yeah, with the wick there, that one there, and all that. And all these ones, they have different names, understand? Like this very one now. This very one now, who knows what this is called?
I don't know.
All right.
Doji.
It's a doji. It's a doji candle. All right. And this doji candle, anytime a doji candle appears, it means a reversal in trend. All right. And then the strength of the doji can determine the length or the duration of the change. All right. Because as you know, everything in the market goes up and it goes down, it goes up and it goes down, it goes up and it goes down. So that means whatever goes up must always come down. And whatever goes down must surely come up. You understand? Except for company stocks. If it's company stocks and the company is actually performing poorly and they are heading towards bankruptcy, it can go all the way down to zero. All right. So you can imagine if you bought stocks, let's say 1,000 stocks that is worth $10 per stock, all your money will just go. All right. So that's why it's very important that when you're going to the market, you go to the market, because this is the market actually. You go to the market with proper knowledge, right? Okay. So today we'll not be teaching about the signals and what they mean and the doji candles and all that, the gravestones, the hammer, the dragonfly, and all that. We'll not be talking about those ones. So because that one will be later in a little bit more advanced class. This is more like basic from ground zero, because if we start talking about those ones, we will overwhelm many. Victor is just entering now. Okay, who is Victor? All right, so let's go ahead. Okay, so first and foremost, this is the platform. All right, you can make it smaller, you can make it wider. For you to get a more tighter view, you can keep it like this. You can drag it up, you can drag it down, you can do basically whatever you want. All right, with it. Okay. All right. So in this case now, I would like to take us to buying and selling. That's the thing I'll teach first. All right. We understand that in the normal market, all right, if you go to market, you buy things, you sell the product, and then you make profit, right? But in a trading platform, it's not exactly like that. It's partially like that because here you can buy and you can sell. All right. And buying and selling does not mean that what you have already, you are selling. No. Because if you come down here, we're now into Euro USD chart. All right. You're seeing it, right? Okay. In this Euro USD chart, you have in this place, you have like you're seeing sell and you're seeing buy. Okay. The first question you might be asking yourself is, okay, they're saying sell. I've not bought anything. What am I supposed to sell? No, what you're selling is actually, your buying and your selling depends on the movement of these things. Let's say, for instance, now you are at this point where you see this double-edged candles, you understand? Which is an indication of a reversal in trend, sharp reversal in trend, okay? And then you see here, right here, the market started going down. If the market was at this point and you made a buy, you understand? When you make a buy, you're saying that the market is going to go up. So when the market goes up, you make a profit. When you think the market is going to go down, you make a sell. So this sell is like you're waging against the market. You understand? Saying that this market will go down. And when this market goes down, you start seeing your money going from red to green and growing and growing and growing and growing. And then by the time that happens, you make money. But if at this point now here, you say that this market is going to go up and you open a buy position, the buy position now, this thing now that is a little, goes up a little, comes to this place and starts going down and going down. At this point, you are in minus. Even from this point, you start being in minus even, all right? You start being in minus because what happens is that, you see, I will teach us what a spread is because I mentioned a spread before. So first, we've talked about buying and selling. Buying is when you think the market is going to go up. Selling is when you think the market is going to go down. Then to collect your money is not calling buy. You don't call it buying or selling. You call it closing the position. You close that position, and then when you close that position, you make money. All right, your money is made, or you want to stop the loss so you don't lose much money anymore. This right here is our demo account. That's what I'm using now. This is not my main account. So don't think I have 6,000 in my trading account. All right, this is demo. Okay, so let's go ahead. All right. So at this very juncture, I want to talk about spread. You know, and then what spread actually means is when you open a position. Let's say, for instance, now I come here and I click on buy. All right. And then I now select what I want to buy. I say I want to buy this euro against the USD. Now, when I'm saying euro against the USD, this chart simply means the euro, this first one here that you're seeing the euro here, right? The euro is the determinant currency, all right? The USD is the under currency. So if the euro is going up, this line will go up as against the dollar, all right? If the euro is going up against the dollar, this line will be going up. If the euro is going down against the dollar, this line will go down. Likewise, if the dollar is going up, as increasing higher than the euro, this line will not go up, but it will go down, okay? And if the euro itself is going down, so that means if the dollar is going down and the euro is going up, this line will go up. That's the basic principle with these lines. Do we understand it?
Yes.
If you don't, I can take it again. Do you understand it?
Hi again, please.
Okay, let me take it again. All right.
It's a lot of it.
All right. You see, this is a currency pair. All right. So in what happens in Forex, there's always a currency pair. Like I said in the presentation, when you leave your country, you're going to another country, you're going to change your currency to that country's currency, right? So let's assume now that we are in Eurozone, all right? And then we want to change to the dollar, okay? This is what this pair is all about, all right? And then later you understand the major pairs, the moderate pairs or the middle pairs, and then you have the exotic pairs. I will not go into that today. That one is a lesson for another day, all right? So, but this one is a major pair, okay? So this pair means that what happens in the euro, between the euro and the dollar, determines how this line moves either up or down, all right? But in this case, when you have the euro in front as against the dollar behind it, what you will see in this place is that when the euro increases in price, when you compare it to the dollar, you understand? This line keeps going up. And as you can see, the current rate is 1.16472, right? For you to get, with the euro, for you to get $1, you need 1.16472 euros.
Euro. Okay.
Okay. So
Okay.
what happens is that if this number is increasing, all right, if this number is increasing, like let's say for instance now it goes from 1.16472 to 1.16584, this line will be going up. All right, and as this line is going up, sorry, I must have missed something there. Are you listening? Are you there?
Yes.
Okay, so this amount here, of course, is dollar. Okay, so that means the euro is bigger than the dollar. Am I correct?
Yes.
Okay, so that means for you to purchase the euro with the dollar, you will need 1.16472 dollar to be able to make that purchase possible. Okay, and if this thing is going up, that means the strength of the euro is increasing. It means that you will need more dollars to get 1 euro. Am I correct?
Yes.
Am I making sense? And you see this trend line, this line will be going up, 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 up. And then you see at this point here now, you see this point here now, this indicator here, it will be going from 116,472, which is somewhere around here now, which is where it is, to maybe 116,476. So that means you will need more dollar to get the euro. Okay, and once the price of the euro is increasing, that is, the euro is getting stronger, this line keeps going up. If the dollar is getting stronger or the euro is getting weaker, this line keeps going down. So you make a buy when you think the power of the euro in this case is going to be stronger. So that means that you're saying that this trend line is going to go up, you make a buy. If you think that this trend line is going to go down, you make a sell. Okay, and then when you want to close your position, that you want to take your money, your profit, or your loss, you click on close position. I don't know, the market is not open now, but let's see if it will work to make a buy. All right, so I click on the buy and it's actually working. Okay, but maybe because it's a demo account. Okay, and then now, yes, we will place a buy, but as it is that the market is not open, it's actually not moving forward, not going down. The profit and the loss is not working. So what would have started happening here is, if this line starts going up, because I made the buy, this one here that you're seeing profit and loss will be increasing. It will be going up, and it's normally colored green. Okay, and then when it's a loss, that is when this line is going down, because I made a buy, this here will be going down, or it will be a minus once it reaches zero and it keeps going down. That minus is the tune at which you've lost money in this market, because this market that you opened, you thought it was going to go up, it started going down. Now, inversely, if you make a sell, let's say at this point now, you say, oh, okay, I think this thing is going to go down. The power of the euro is going to decrease as against the dollar, and you make a sell. When you now make a sell and the thing starts going down to this point, you will see this profit and loss account will increase drastically. You've made maybe $1,000 or $10,000, depending on the weight, the amount you have in your account, and the leverage that your broker has given onto you. All right, that one I can talk about leverage later. Okay, so in this case now, buying and selling is clear, is it? Can we say you understand buying and selling now? Good.
Yes.
All right. Pauline, do you understand it now?
Yes, thank you.
Good, very good. So we'll move on. All right. So when you receive a signal and they say, for instance, because we're using the euro and the dollar, they say euro versus dollar, sell. What does it mean? Can anybody tell me?
It means that euro is not sell euro is weak than dollar. C'est ça?
No. When
No.
you receive a signal and they say euro versus dollar, sell, what does it indicate? Does it indicate that these lines are going to be going up or they're going to be going down? Does it mean that the dollar is going to be stronger or is it going to be weaker? What does it mean?
The dollar is going to be stronger, of course, I think. You will need...
Yes, exactly. You're right. You're right. So that means the euro is going to be weaker compared to the dollar, or the dollar is going to be stronger compared to the euro when they say sell.
Okay.
And then, yes, so when you see the sell, that sell sign normally comes up with number one, they say stop loss. That is, set your stop loss at this position, set your take profit one, that is TP1 at a certain position, take profit 2 at a certain position, take profit 3 to profit 5 in the stand at certain positions. What that means to take profit, if you see here, if you look up here, you see these two buttons. Are you seeing close at profit and close at loss?
Yes.
Yes. So close at profit means take profit at a certain point. Like in this case now, I clicked on it and the number showed. This number is saying I'm setting to take profit at 116515. So that means that once this line reaches 116515, which is somewhere where am I making a buy or a sell here? Who can tell me? These places are open now. Is it a buy or a sell? Can anybody tell me? Can anybody tell me if this is a buy or a sell?
This is a sell. I hope that is a sell.
You hope. I don't want to hope. I want to tell me.
Okay. Okay, I don't know exactly.
I want to see if we're paying attention so I understand what's happening, okay?
If you close at profit, okay, sorry, I will try to answer, but I was lost in some point.
Yes.
If you in my logic, if you close at profit, it means that you're making profit, but you could lose, so you have to exit now.
Yes, that's what it means. Yes.
Okay.
That's the logic behind take at profit. Because
so
like we know, this market, it goes up and goes down. And if you see this peak now, this very peak, understand? Are you seeing my mouse? And
yes.
This peak, you see this peak can last for only 1 second. And if you're holding the thing and you want to do it yourself, you might not be able to touch sell before this thing goes down again. And the money you would have gained here would have lost. But if you have set it automatically to stop at 1.16484, let's set it here now. 1.16487. Okay, let's just call it that.
Yes.
Yes. 1.16487. Okay. So
yes.
once I choose it there, what happens is that automatically, once this thing gets here, that means I've made this amount of profit now that will show. All right, which is 563.49 crowns that I've made, which is it's not really much. Okay. But then if I open that, what happens is that I will collect my money, which is the profit of this amount when it gets to this point. Okay. But let's do that. Let me start from the beginning. Let me close it down so we can understand. Okay. Let me close this position. I've canceled an order because we know we are trying to make an order because the market is closed. Okay. So let me go back again and make a sell. They said sell euro versus dollars. I go to sell. I click on it. It opens up. Now this one, the system is asking me here, how many of these units do I want to buy? This is very important. You know, how many of these units do you want to buy? Some systems set it at an automatic rate that you don't over leverage your account. You understand? Over leveraging your account is that maybe let's say you have $1,000 in your account. You don't go ahead and open up positions of $1,000 because if you open positions of $1,000, what will happen is that once the value of what you're buying or selling reduces and the profit and loss turns to a minus, the account will close, you will lose everything. So the best way to go, knowing that the market is volatile, can go up and down, you say, okay, I have $1,000, but I will not leverage more than 10% of the total account. That way you are in safety. What that means is that even if the market goes down so badly before going up, you will not lose all your money. You will still stand at a profit. That is called proper risk management. Because to every of these signal, they tell you to practice proper risk management. We've seen the signals that are sent out yesterday, right? Good. So now let's say, for instance, they say buy, and you look, this account is rich, this account is heavy, all right? This account can take this amount, all right? And I'm going to buy 1.2 million worth, okay? And I choose that one. And then they say set your stop loss. In this case now, your stop loss should be in a position higher than the current position you're buying from. You know why? Because you're making a buy, because you're making a sell. Any upward movement means you're losing money. Am I correct?
Yes.
Any downward movement means you're making money, because when you say sell, you're saying the thing is going to go down. So once it goes down, voila, you're making money. Okay?
Wow.
So in this case now,
It goes down, make money.
yeah, when it goes down, you make money because you're selling.
Mais les chaussettes, hein?
Do you understand?
Yes.
If it's too much, just say stop and I will explain.
The head is going red.
But you understand it. Your head should not go red. It's easy. Just relax. Okay. All right. So in this case now, they say sell. To sell means they're telling you that the euro versus the dollar is going to go down. That means the price of the dollar is going to be stronger than the power the euro has on the dollar. Okay. So now we're opening the position of 1.268 million. All right. And then they say set your take profit at a certain amount. Your take profit is going to be on a position lower. Okay. And that's why you see the position I'm clicking on here is 116416. Now the current position is 1.16459. You see that? And if I want to take more profits, all right, I want to make more profits, I don't click on plus, because when I'm clicking on plus, I'm increasing this value, and when I increase this value, I'm saying it's going to go up. That's actually a loss. Let me illustrate. So let me click. I'm clicking, it's going up. The amount I'm going to make is going down. You see that? But if I click on the minus, okay, I click on the minus, you see the amount is going up. Are you seeing it? Can anybody see the amount going up?
Yes.
Very
Yeah, because I'm clicking on the plus, and this is the sell position, okay? So I'm setting my take profit so I can make 10,000 crowns. I like 10,000, okay? So I'll put it at 30 crowns, okay? And then I'll leave it there. And then this is my take profit one, okay? I will explain how to put these different other marketings and openings, okay? So now this other one, another important point to set is your close at a loss. This your close at a loss is your safeguard for your money, because sometimes these markets can go haywire. It can go haywire, but it going haywire does not mean that it will not come back up again. But before it comes back up, maybe the total amount to your account would have drained, and your account might not be able to hold it. So that's why it's good to manage your risk, set a stop loss at an amount that you know you can lose, and you will not go and hang yourself. Okay. So you now click on close at a loss.
Not trade if you you think that you're going to hang yourself.
There are people that lose money, they go and hang themselves. You don't know.
Yes, but better not trade then.
Exactly. You have the right mentality. So don't trade if you know if you lose money, you go hang yourself. So here you have, because you see the truth of the matter is this, if my aim of joining Epic is that I didn't join Epic to win 100%, all right? I joined Epic to win, to make a net profit, if you know what that means. If you subtract the minuses and the pluses, that is, after doing your plus and minus, you understand, I come up on a very big plus side. You understand? I'll make my profits, okay? Which could happen. But there's some trades that maybe you're not patient enough. You understand? Ah, no, I don't believe in this thing. Let me just close it. But the good thing in trading, one thing to learn is your mindset. Just like what Hoton said. Your mindset, you need to watch your mindset and make sure that you are not scared. Make sure that you're not panicky, because when you panic, you can make rash decisions that will cost you money, or that will make it that you will not make the amount of money you're supposed to make. But in doing that too, you need to be careful about greed, because when you're too greedy, you can lose. That you have to find the middle line there. That's actually what Epic teaches you. You understand? You know, because sometimes you see the thing is going up 10,000, 15,000. I can make 20,000 today, and you're there. The thing will just stop at 15 and start going down to minus, and if you never come up that day again, you will cry. Why didn't I take it at 15? You know, that's exactly how.
Then you hang yourself.
No. That one you won't hang yourself, because you will just regret, because the money you would have made has reduced drastically. Instead of making maybe, let's say, 15,000, you collect it and go and sleep. You want to make 30 or 20, and the thing stops at 16 and starts going down to 10. Then you not close it there. That 5,000 will pepper your skin, because that money that was money you saw in your account that you don't have anymore. So you see it as a loss. Okay. So that's why it's good to actually set your goal per week, per day. This is my goal. Every week, I'm going to make $1,000. Every day, I'm going to make $200. This $200 will amount to $1,000 5 days of the week, okay? And you target it, you set your goal there. You set your goal there and you pursue it. But you don't have $100 and you're setting a goal that you're going to make $10,000 in a day. It will never happen. You understand? You know, according to the amount you have, you set a goal. I always say, set a goal of at least 10% of your investment per day. But it always ends up, you make like 50%, 60%, 100% sometimes of your investment. But be modest, be shy, you know, set it low. And then when you hit above, you're rejoicing and happy. Okay?
Yeah.
All right. So here you're setting your stop loss, that is closed at a loss. And then you see when I'm closing at a loss, if I click on a plus, you understand? What I'm saying is I am going to be increasing my loss, okay? You see the line going up, right? And as this line is going up, what is happening is that my loss is increasing. Are you seeing it? So if I click on minus, that means this thing will reduce. Please close that door, please. If I click on a minus, you see the thing going down. It's going down, it's going down, it's going down, it's going down, and then your loss is at minus 3,000, okay? So you set your stop loss. Your stop loss is only one. That stop loss is the position you want to leave it at. It means that once the market gets to this position, to this point that is going up now to become, that the dollar is becoming weaker compared to the euro, or the euro is becoming stronger compared to the dollar, this line is going up. That means since I opened a sell position, I will actually lose money if the dollar goes down and the euro goes up. But I will make money if the dollar goes up and the euro goes down. Do we understand that? Good. That's very good. All right. So now I've set my stop loss and I've set my take profit. But you know, because this program too, you can either click on this line and drag it up. If I'm in the right view. No, it's not working. All right, let me just use this one. All right. If I want to make more money, if I want to increase more, I click on the minus, so that this very one, the minus and the plus, is this one going up or going down. You see the minus and the plus is by the side. So since it's a sell position, this one going up means the money will be reducing. This one going up means that the money will be increasing. Okay? Do we understand? Do we understand? Okay, good. All right. So let me click to actually bring it down to my 10,000. Okay, good. All right, so I've said this is the first opening that I'm doing. And you see that this amount now, this amount is small compared to my account. So I click on what? On sell, because I opened a sell position. I'm trying to open a sell position, okay? And as you can see here, market is closed. Only orders are accepted. Order is that you're placing this order now that once the market opens, the market will automatically, execute your order, okay? There's that setting too. We will learn that one later, not now. So I now click on sell, and this position is open. And now this position is open, and we assume that the market is on. And you see that the thing is actually heading towards your take profit one. That means it's green and it's going well. What you can do is to come back again to the same Euro USD and open another position of sell. You understand? But don't over leverage your account. Always make sure that you're looking at your marginal, the utility that you have, and the amount that you can actually leverage, so you don't end up over leveraging your account, and any small movement can mean closing of the account. What I normally do for you to play safe, don't open multiple positions. Open one position and set a take profit at maybe take profit 2 or take profit 3. You understand? Or do it 1-1. Once you hit take profit 1, it closes, you open another position, take profit 2, it closes, but that one will mean you monitoring it, because this is supposed to run on autopilot. You don't really have to be there to actually make money. You can do these things, set it up, and go and sleep. And then money is flowing in, but you really have to have a thick skin on your nose to be able to have this thing running, and then you still concentrate and you sleep. Sometimes it's difficult to sleep when you have it on, but then if by the time you've matured and you understand how it works, you can actually go to bed and then you sleep. Okay, any question?
I have a question, but maybe when you finish, I don't know if you have time.
I have time now, you can ask.
Okay, Emmanuel, for example, can you help us thinking in basis of a week, for example?
Yes.
How do you plan your investment per week, for example, if you have a goal of, I don't know, if you have a budget of, I don't know what, per week, how are you going to manage that each day?
Okay, very good. If you have a capital of about, let's go with 1,000 euro, okay? If you have a trading capital of 1,000 euro, and then you're trading with a broker, most registered, verified brokers, they give you a leverage of 1 to 30. And that means that if you have 1,000 euro in your account, you can open up volume of businesses or transactions that is up to 30,000 euros. You understand?
Okay.
But that leverage too means that you can make money fast. It also means that you can lose money fast.
Of course.
All right? Because you can't have it two ways. You can't eat your cake and have it. All right? They give you a high leverage, so don't go for too high leverage. And if you're going for leverage, be careful so you don't go. You say, okay, like people that like taking loans, understand? Okay, this money. Let me mute everyone. I'm hearing a disturbance in the background. People they like credit. Oh, they've given me credit. Let me just trade anyhow I want. If you trade anyhow you want, you end up losing money and you won't like it. So that's why, when you have $1,000 as your capital, what you should do, set, let's say 20% goal. And that 20% means every day I'm making $200. So the 20% is actually 20% per day. 20% per day, not per month. Because if you make $200 every day, in 1 week, you've made $1,000. That means in 1 week, your target.
And the mutala.
They do some kamuta, they do some koshikadeta.
Yeah, okay.
So it means that you've doubled your money in 1 week. You understand? So that means 20% every day means 100% a week. Okay? And it means 400% a month. All right. So, but if you want to be more careful, more moderate, okay, you can set also 10%. That means from 1,000, you're making 100 euro every day. In 1 week, you've made 50% profit. Okay, that's proper risk management and it's very good. And then to do that, every time you want to open a position, like the broker I have, they set it, you can set it at 10%, 5%, so that any position you open, the first suggestion it gives to you is to open a position that is little compared to your account so that you don't lose your money. Okay? Yeah. Did that answer your question? Good.
Thank
Any
you.
other question? You can ask a question now. If it's crystal clear, that means oh wow, I'm on a road today.
Hello.
Yeah, hi.
Anyways, from this angle, from this side where I am right now, I'm actually seeing those signals that looks like when the heart is palpitating and the person is in in ICU. But so for me, that's how it's looking. Yeah.
And what are you talking about? Are you talking about
The candlestick? Yes.
yes.
You know how it is when somebody is in a fetal situation, in the ICU. That's how it's looking like now. The whole sell and buy
Oh
stuff.
yes,
Believe me,
like ECG lines.
Yeah, exactly.
Okay.
Okay, you just noticed. That is how it is.
Yeah,
So that's how it's looking like now. So
ECG.
that's how it's looking.
Yes.
That's how it's looking like now. So from my angle, I look like somebody that they need to resuscitate back to life to be able to understand these lines. So I believe that today is not only the first day that we'll do this.
No, it's not.
Because seriously speaking, I will say I understand just one thing today, which is the buying and selling. Then the other.
Then you're ready to trade. All right. So no, but the thing is, you're right.
But is there any way this can be sent? Is it possible?
No, this thing is recorded. This is both my
it is.
Everything I'm doing is recorded.
Okay, good. Okay, so I will get it later.
Yes, you will get it later.
Okay, thank you.
Yeah.
I have to run now, right, please.
So good. Any other question? If you have a question, you can unmute yourself and ask.
Emmanuel.
Yeah.
Please, what is the minimum amount we can use to begin the trading?
Well, they normally, most brokers, the crazy ones and the criminal ones ask you to start with a minimum of $250. Don't listen to them. Any broker that calls you and tells you that look, your minimal investment must be over $200 or 200 euros, run for your life.
Okay.
Don't go for them. A genuine broker will tell you that the minimum amount you can use to trade could be $10, it could be $20, it could be $100. It depends on you. You understand? You know, and then a genuine broker will not be the one that is pushing you to put money into your account or pushing you to invest. You understand?
Okay.
A genuine broker is the one that he just gives you access to the platform. Whatever you do is your business. But they can send you news. You know, all this things we're seeing here is controlled by news, you know, right? It's good, it's enough for Donald Trump now, to open his mouth and say one of those is rubbish. The dollar will go down straight.
Yes.
I'm telling you, that guy, he knows the power he has, and he wields it anyhow. You know, I used to say that Donald Trump is like a child that has a key to nuclear codes. You understand? You know, he when he gets angry at you, he can just use the code on you.
Yes.
You know, so that's just it. I'm not saying he's a bad guy. He's a good guy. Can be a good guy for many, but yes, that's as far as it goes. So the market is controlled by news, like the price of oil, for instance, you know, which is very volatile. Once a news comes up and they say an economy is closing down, the price of oil starts going down. One were like gold and gold, silver, and dollar. They are very closely related. Now, once the dollar is going down, the price of gold is going up. Once the price of dollar is going up, the price of gold is going down. You understand? That's exactly,
Yes.
those are the correlations. So these are market forces. There are a lot of things that a small thing happens like this, you see this line changing. It's not as if the line changes at will or there's somebody controlling it. No, it's just about what happens in the market. Okay?
Okay.
All right. So any other question?
Emmanuel, it's not easy to know what brokers we should use. Do you have any recommendations? Because
Yeah, I do. I can send you a link.
yeah.
We're in Europe together now, so that will not be an issue. Okay.
Actually,
Where
I
is-
chose one. I chose one.
Which one did you choose?
I chose Admiral Market.
Okay. All
Yeah,
right.
I checked wherever I could to make sure that it was not they was not you know, they were good, and I think it's okay, but you know, you never
Yeah,
know.
but the broker I'm going to recommend to you, once you click on add money to your account, it enters. Once you want to withdraw, it takes them just 1 hour max. And they've, because my idea of a genuine broker is a broker that is easily accessible. If you want to chat them up, they are there to reply you.
Okay.
If you need to put in money, it's easy to put in money. Not they should not be good at taking money without being good at giving you back your money. Because some of these criminal brokers, they are good at collecting your money, but they are very bad at releasing your profit. If you make profit, there was one I had before. I made profit of some amount, let me not say. And then to collect it back, it was fight.
Yeah.
When
Let's
I say
not-
fight, it took almost 2 weeks to get the withdrawal order. But the one I'm using now, I think I made a withdrawal on Thursday. I placed a withdrawal order on Thursday, and then the next day, yesterday, the money was in my account already.
Okay.
So a withdrawal order was placed in the evening. The next day, I have my money. You know. So, and you know how it is, because these people, they operate internationally. If you place an order to withdraw your money, they click it and they send it to your card. It will take, it will go through the card system, through MasterCard, from MasterCard back to your bank. But all this procedure took just 1 day. That I love that. You understand? I don't want hassles, because you might have money, I might need emergency fund, something you want to do now, you want to solve, and it's your money. You're a millionaire, but you cannot use your money. It's crazy.
Yeah, of course.
Crazy.
Yeah.
I don't want that, you know.
Okay.
And then these guys too, what they do is that with your first deposit, they give you, I think it's about 20 or 30% extra for you to trade with. That I'm not talking about leverage now. I'm talking about cash that I can trade with and withdraw later if you want to withdraw it. You understand? And then when they add that to you, you're free. They don't place any demand that you must trade 1,000 times with that money before you can collect it. No, they don't. The other one I was talking about, if they give you $1, you must trade 100 times before you can take that, because they want you to trade and lose that money. So before you can't withdraw it anymore. So what's the essence? No? Yes. There are some, they offer you some 10 risk-free trading. Don't accept it, because those 10 risk-free tradings, you trade risk-free, you will make money, but they will not allow you to take it. So why give me risk-free trading when I trade and I make profit? You want me to now trade risky with the same money, and I lose the whole money, I lose my own capital as well. Doesn't make any sense. So it's a jungle out there. So I'll send you a link for those of us in Africa too. I have a very good broker that I can send you their link to, so you can use to actually do your trading. All right.
Thanks so much.
Yeah, you're welcome. So in the absence of any question, I think we should close now. Any objection?
No, the last question I want to answer.
Okay.
Please,
ask the
Emmanuel,
question.
when you invest your money and you want to make the withdrawal, did you ask your certificate, something to pay to have back your profit?
No, that's what I'm saying. Anyone that demands to collect a part of your winning, don't trade with them, run away. They are criminals. I'm telling you, there are crooks out there. They can tell you, okay, now you've made 1,000 euro. You have to give us 20% before we can let you collect your money. There are crazy people are out there. Be careful, please, people. Be careful. You know, and you see, some of these brokers might not be regulated. They might not be registered, and if they're not registered with the FSC in Europe and some other registering bodies in other countries, in other continents, don't trade with them because they can do anything. They can disappear with your money tomorrow, and you don't know where they are. Can't do anything. But the ones that are registered, you understand? You are protected by the I'm talking about EU now because we're in EU. You're protected by in Swedish they call it insättnings guarantee. That means the amount you put inside is actually protected. If anything happens, you just report and they pay you back the money. You understand? You know, because these organizations make a deposit with these bodies that if anything happens, they can take from that amount and pay you back the money.
Ah, okay.
Yes.
You have to give us all this information, please.
Yes, I can send you a link that you can use. But the thing is that please be careful. There are crazy people out there. Mad people are out there. And guess what? They're looking for your money.
and I think that everyone should check on the, I don't know, I checked on the authority in France on their recommendation. You really have to be careful about your specific country. What do they recommend? So
no,
this is
the one thing is that it's not specific country now. It's EU. Since they joined EU, you understand? They've given every right to the EU. It's central now. The laws in France are the same with laws in Sweden. All right. The laws in Sweden is the same thing as laws in Malta and Cyprus and all those ones because they are governed by that EU and EES contracts. Understand? And they signed together. So what actually controls the EU is the FSCE. That's what they're called. The Financial Society Certificate or whatever, I understand, you know. And then I think the name is in French. That's why I don't know how to call it. You know, French, they try to dominate Europe. I don't know why.
Are you kidding?
So, you know, the thing is, that body is central. It means that for anyone to be able to come out and say they're a broker and they're operating in EU, they must be certified by them. And they have a stringent process of certifying them. So, and there's a way you can check to see that they're certified too. You understand? So all you need to do, go into the system, type in them, and then Google will tell you whether they're certified or not. It's not even difficult.
Exactly. I think what I want to say is that we have to take this responsibility to check and double check because otherwise.
Even when I send you the link, you understand? Check to see that I've not been deceived.
Exactly.
Yes, you understand? But me, I do my homework. I check it very well before I do it. You know? So that's it. Okay? All right. Okay. So let me stop recording so we can now gist for any further.